Yeah, there is some technical issue, so we'll be starting in 2 minutes. Yeah, good morning, everyone. So there were some technical issues. Such a technical team is joining, and FNO team is also joining. Uh, Meanwhile, we'll start. The people who are there from the fundamental side can start talking about their part. So yesterday we saw some corrections in the US market. We are seeing US market after having a good run in last 1 month is seeing some resistance at the upper level. And also Fed statement was also indicating double direction, like the inflation is coming off, but they can see some more hike. Uh, so that is keeping the market range bound at the upper end. So we need to watch, and also result is also consistently coming over there as a mixed bag. Some results are good, some are bad. Apart from that, the futures are also marginally negative, and Asian markets are also mixed bag. Not seeing much movement in the Asian market also in today's trade. On the other hand, commodities are seeing some positive trend, wherein oil has again moved up to $85. And apart from that, even the iron ore and steel has seen some positive trend. That is mainly driven by some positive statement from China government side, wherein they had the the indications are that they may be reducing interest rates in the coming period, and also the possibility of uh, or the construction activity is picking up right now. So that is pushing up iron ore and steel prices. So iron ore is up by around 2.5% in China morning trade, and steel is also up by around 2%. So overall, direction seems more of a range-bound trade in today's trade. So yesterday we saw some positive trend, and today we may see some range-bound movement. I'll request Jehan to take up from here.
Yeah. Good morning, everyone. Uh, a Techno Electric and Engineering Company has sold off 37.5 megawatt of its wind power assets out of 112 megawatts situated in Tamil Nadu at approximate consideration of 160 crores. And it has also entered into MOUs for sale of another 71 megawatt. These wind assets have been a drag on the balance sheet as there has been consistent delays in payments. So this should improve the cash flows for the company and should be positive for Techno Electric company as the EPC business is doing well. Angel One has received an in principle approval from SEBI for sponsoring a mutual fund. So they have been planning to introduce a mutual fund since more than a year now, and so this will be positive. They will be able to cross sell the entire client base that they have, which runs into many millions. So they will be able to cross sell the mutual fund product as well. Uh, Piramal Enterprise result was okay. Credit cost remains elevated. Although stage 2 assets have declined, they still remain high at 12%. If we look at the PCR that company has made on stage 2 plus stage 3 regarding the wholesale book, that stands at 45% now. So only in the event of let's say stage 2, entire stage 2, slipping into stage 3, then that would be a problem. But we don't think that has a lower chance of happening. And company said that most of the provision buffer that needs to be created has been done. So going forward, there won't be any need to create more provisions, and so credit costs can decline going forward. They also reiterated that retail mix, which currently is at 43%, should improve to almost two-thirds, that is 66% over next few years. And they are targeting that at that time, the ROA potential for the company would be at 2.5 to 3%. So we remain neutral from near-term perspective, but from long-term perspective, we are positive. Equitas Small Finance Bank result is in line with expectation. Credit cost came below expectation, while slippages came above expectation. Slippage ratio was at 4.6% versus expectation of 3.8%. Loan growth accelerated to 20 year on year to 27%, sequentially to 9%, and also ROA crossed the 2% mark this quarter because of lower credit cost. So overall outlook is positive for Equitas. Slowly and steadily, bank's performance is improving, and it is also available relatively cheap. Likhita infrastructure result has improved. It's a proxy play on the expanding city gas distribution pipeline infrastructure. Revenue came at 91 crores, up 12% sequentially, 41% year on year. EBITDA margin was stable at 22%. Profit also grew 8% sequentially, 38% year on year. We are positive. Everest Kanto cylinder continued to disappoint. Result has declined. Revenue was down 25% sequentially, 45% year on year, as the demand for CNG has taken a beating because the gap between CNG price and diesel has been narrowing as the CNG price continues to increase. Profit came at just 2 crores against year on year 60 crores. So quite a downfall here. So near term looks to be, we expect stock to remain sideways. Minda Corp result has improved. Revenue and profit grew by 45% year on year. However, company had acquired balance equity stake of 49% in Minda Instruments Limited in January last year. So last year's December quarter does not have that revenue and profit. So if we adjust for this acquisition, then revenue and profits would have grown at around 22%, which is still higher than its OEM clients, the two-wheeler clients. EBITDA margin was stable at 10.7%. It's a decent proxy play on two-wheeler industry, and company continued to win new orders across segments for value-added and new age products like smart keys, sensors, digital clusters, which should improve the product mix and support the margins going forward. So from long-term perspective, we remain positive. Thank you.
Yeah, thank you, Jehan. Now we'll start with the derivative outlook. As per the overall overall scenario which we have seen in yesterday's session, the Nifty has bounced back sharply from the supportive levels of 17,700 to 800 mark. But on the upper end, if you look at the overall OI position, also 18,000 level is still holding the highest resistance, because at that strike we are seeing that on the monthly basis, almost around 18 million positions of call writer positions are getting added up at 18,000 strikes. So 18,000 is a very much important level. Once if Nifty clears that level, then we might see some stability in the market and some buying to be generated sharply towards the 18,200 to 18,300 level. The positive factor which we have witnessed in yesterday's session was that in the second half, the buying was witnessed sharply, due to which the call writer positions got liquidated around 17,700 and 800 strike, and against that we have seen that the put writer positions got added up against the call writer positions. So this is a positive factor. In today's session, in first half, we expect the market to bounce towards the 17,980 to 18,000 level, and from that level again we might see some range bound momentum in the market. While PCR yesterday closed at 1.21 level, PCR has closed at a positive zone, and we expect a PCR to shift towards the 1.45 to 1.50 levels. While on the downside, the support for PCR would be 1.08 level. Once if PCR goes below 1.08 level in today's session, then again we might witness some sell-off in the market. So currently, as per the view, we expect some positive momentum in the first half, and again in the second half we might expect some range bound session in the market. As per stock specific, we expect Can Bank, India Mart, Apollo Hospital and Torrent Power. This four counter has shown some positive strength in yesterday's session, and we expect the buying momentum to be continued in today's trading session. So that's it from the derivative front. I will request a technical guy to carry ahead.
Thank you, Amit. Good morning, all of you. Yesterday we saw that market managed to sustain above 17,870, and Nifty managed to close above today's session, 17,940 level in cash in spot. Then we expect further rally. Otherwise, we saw that his upside is next immediate resistance place around 100 DMA, that is 17,940. Below 17,800 is immediate support for intraday session. The Nifty again break at 17,800. Then next support place around 17,720. Bank Nifty also facing immediate resistance around 41,900. Above that, we expect further rally towards 42,500, and immediate support place around 41,500, 41,300. See, all the two index, both index trading in near the 100 DMA resistance. If break that level, then we expect further rally. Otherwise, we saw that trading the range upside 17,900, 940, and downside 17,600. Bank Nifty also upside 42,150 and downside 41,500 range. Nifty Finance also trading the near the resistance level, that is comes around 18,620 and 18,700 in upside. Immediate support place around 18,470. Stock specific, Cummins India looks positive at current level. We already given a call in Cummins India. Our target is 1540 and 1570 in upside. Support place, stop loss place around 1410. Second, HDFC Limited also looks positive at current level. Next immediate target place around 2800 and 2650. NCC looks positive in mid cap. Next target around 102 and stop loss 1590. We already given call in NCC. That is for technical fundamental guidance.
Good morning. Dreamfolk has posted its result yesterday, and the company has posted ahead of expectation set of numbers for the quarter, with revenue coming in at 204 crore, which is up 19% QOQ and 107.5% year on year. EBITDA margins also improved and came in at 12.8% versus QOQ of 11.7%. Higher margins led to higher PAT to the company, which came at 19 crore. Stock is trading at 31.2 times FY24 EPS. Thank you.
Good morning. Shree Cement result was in line with expectations. Volumes grew by 23% to 8.03 million ton year on year on account of improvement in construction segment. Cement prices were muted in Q3, which impacted its realization. Uh, EBITDA per ton stood at 882 versus 701 sequentially on account of better fuel mix. The management has guided sales volume to be close to 32 million ton in FY23. Although demand is robust, driven by infra push, muted cement prices and higher fuel cost is likely to impact company's margins. We are neutral on the company. Kirloskar Ferris had its con call yesterday. So the management has indicated its volume guidance to be around 5 lakh ton for FY23 and 5.5 to 6 lakh ton for FY24. During the quarter three, casting volume decreased by 6% sequentially, mainly due to lower demand from the tractor industry. Although coking coal prices have started to rise again, management is confident to pass it on to the end consumers. Demand continues to remain strong both for pig iron and foundry, and with the removal of export duty, exports of pig iron has again picked up. Auto business is also doing well, especially the commercial vehicles, and margins are likely to remain stable going forward at 15 to 17%. We are positive on Kirloskar Ferris. Ambuja Cement had its con call yesterday, wherein the management has indicated demand to remain positive with higher capacity utilizations. Synergies with the group companies will drive cost reduction. If we look at the Q3 results, the freight cost of Ambuja Cement was down by 166 rupees per ton as compared to increase of 111 rupees per ton of Ultratech and 87 rupees per ton for Dalmia Bharat. So clearly the synergy is helping the company to reduce its cost structure, and we further expect the cost to reduce, and margins are expected to improve in the coming quarters. We are positive on the company. Thank you.
Good morning. Samvardhana Motherson announced its result. The result was marginally below expectation. Revenue came in at 20,226 crores versus an expectation of 19,385 crores, which grew by 11% sequentially and 26% on a YOY basis. EBITDA margin came in at 7.8% versus an expectation of 8.1%. The company witnessed volatility in commodities. However, some softening of energy prices was seen in Europe. Global automotive production remained stable on a QOQ basis. Volume recovery was seen in Europe, which was offset by COVID-led decline in China. The stock is trading at a PE of 19.3 times FY24 EPS. Escorts Kubota announced its result. The result was below expectation. Revenue came in at 2,264 crores versus an expectation of 2,234 crores, which grew by 20% sequentially and 16% on a YOY basis. The company's profitability was adversely impacted due to unabsorbed commodity price inflation, coupled with an exceptional item of 53 crores on account of impairment of investment in the joint venture Tadano Escorts India. EBITDA margin came in at 8.4% versus an expectation of 10.3%. Tractor volumes grew by 10.7% YOY, while construction equipment volumes grew by 5%. While inflation impact on margin may take some time to normalize, the overall macroeconomic factors remain favorable. The stock is trading at a PE of 23.5 times FY24 EPS. Cummins India announced its result. The result is ahead of expectation. Revenue came in at 2,185 crores versus an expectation of 2,000 39 crores, which grew by 12% sequentially and 25% on a YOY basis. EBITDA margin came in at 18.9% versus an expectation of 15.3%, or as against 14.8% QOQ and 15.6% YOY. The demand momentum seen in the earlier quarters continued across segments, including international markets during the quarter, with moderation in commodity costs, oil and other industrial raw materials, coupled with easing inflation. The buoyant tax collections economy continues to sustain growth momentum. The company declared a dividend of rupees 12 per share for FY23. The stock is trading at a PE of 33.9 times FY24 EPS. Minda announced its result. The result is ahead of expectation. Revenue came in at 2,916 crores versus an expectation of 2,650 crores, which grew by 34% on a YOY basis and was flat sequentially, backed by diversified product portfolio, increasing content per vehicle and cross-selling of products. EBITDA margin came in at 11.6% versus an expectation of 11.1%. The company says that even on QOQ basis, while the industry volumes declined by 16%, it was able to grow despite softening of some commodity prices impacting revenues. The board has in principally approved acquiring remaining stake, that is 22.64% currently held by joint venture partner Kosei, to make Minda Kosei Aluminium a wholly owned subsidiary. The purchase consideration for this stake is around 115 crores. The board approved an interim dividend of 0.5 per share. The stock is trading at a PE of 32.3 times FY24 EPS. Thank you.
Good morning. Symphony Limited reported result, and the result was below expectation. Revenue grew by 35% YOY at rupees 277 crore versus expectation of 292 crore. During the quarter, it has observed subdued demand from Australia and USA that impacted the performance of climate technologies. Margins came at 15.9% versus expectation of 17.5%. So it has observed rise in expenses such as advertising and sales, freight, and other costs, which was offset by flat growth in employee expenses. The stock is trading at a PE of 33.9 times to FY24 EPS, and the outlook remains neutral as we will continue to monitor the impact of global headwinds on the overall business. Trent Limited result is in line with expectation. Revenue grew by 53.7% YOY and 18% sequentially at rupees 2,300 crore. Westside registered a LFL growth of 17% vis-a-vis Q3 FY22. Online revenues through westside.com and other Tata Group platforms contributed over 6% of the Westside revenues. An emerging categories segment, including which includes beauty and personal care and footwear, contribute to over 18% of overall standalone revenues. The EBITDA margin reported at 14% versus expectation of 15%, which was below YOY also. The last year it was 18.2%. During the quarter, it has entered into a joint venture with MS Group of Sri Lanka. This collaboration is expected to benefit MS to expand its international reach while maintaining trade strategy to offer fully owned brand at its retail stores. The stock is trading at a PE of 75.5 times to FY24 EPS, and the outlook remains neutral at current valuations on account of lower margins for the quarter and ongoing global challenges. The Godrej Agrovet Limited result is below expectation. Revenue grew by 11.8% YOY at rupees 2,323 crore on account of robust volume growth. EBITDA margin was contracted at 5.9% versus the expectation of 7%, as it was a challenging quarter for some of the businesses such as vegetable oil, where it has observed sharp decline in crude palm oil prices, which impacted the top line as well as the profitability. In crop protection, profitability impacted due to unfavorable product mix. Also, margins were contracted for Aztec Life Sciences on account of lower realizations for its key enterprise products. And in dairy, high milk procurement prices impacted the overall margin profile. The stock is trading at a PE of 18.3 times to FY24 EPS, and the outlook remains neutral for the stock. Thank you.
Yeah, apart from this, Cummins has reported very good numbers. Numbers has shown sharp improvement in margin, wherein margin has came at 18.9% versus expectation of 15.3%. This is also led by improvement in the gross margin. So, though the valuation set around 34 times FY24 earning, but leaves is scope for improvement from here. Then Transpec reported good numbers consistently after last 1 or 2 quarters, but the share price are at attractive level. Company has reported good improvement in EBITDA margin to around 21.5% versus last quarter 16% and last year 17%. Share is trading at around 11 times, which looks very attractive at current price. Then Gujarat Pipavav also reported a very good improved set of number, considering that the export and import has reduced, but the performance of Gujarat Pipavav port has shown good improvement. Revenue moved up by around almost 48% year on year and 10% quarter on quarter, whereas EBITDA margin also saw some improvement to 56% versus Q1Q 53 and last year 51%. So here again, the result shows substantial improvement. That's all from us. Now I'll request the commodity team to take up from here.
Thank you, sir. Good morning, everyone. So on the currency front, the RBI came out with its policy and they have raised the interest rate by quarter, taking it to 6.5. Going forward, I think the rates should stabilize here. Also, I think the rates will remain high on the higher side for the upcoming financial year, unless there is major growth shock. I think the rolling back of the rates will happen from next financial year itself. For the Indian rupee, we have seen it's open on the positive side at around 82.65 and trading with an high of 82.70. In the intraday session, it will be highly sensitive to the dollar index, which has still trading above the level of 103 and could test 105 going forward. So for the rupee, 83.20 is the maximum depreciation that we are seeing. For the intraday session, it could remain consolidated within the range of 82.78 to 82.60. So a consolidation momentum for the Indian rupee today. JPY INR has opened with a gap down at around 63.04 and is trading into the positive range, rebounding from the lows. However, it will still face resistance at around 63.13, 63.15 unless it gives a breakout to that. We could continue to predict a bearish momentum in the pair towards the 62.70 levels. For Euro INR, it has again opened with on a weaker note at around 88.79. In today's session, it could test 88.61, 88.46. It will trade on the weaker side, but with a sluggish momentum. For GBP INR, it has opened on a flat note and is trading with a weak sentiment at around 99.86. If the pairs gives a breakdown to 99.75, it will again come down to test the level of 99.50, 99.30 in the upcoming sessions. Otherwise, the resistance for the pair can be placed at 100.26. So that's all on the currency and commodity front. Thank you.